please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, first up, let's take a look at the Asian markets. Remember, a 700-plus point recovery on the Dow means that the Asian markets too are trading higher in today's trading session. At the open, the US markets, remember, reversed their losses on overnight trade. The Japanese index, that one's leading the gains with a gain of almost 1%, 200 points on the Nikkei. If you take a look at the dollar yen, that one has weakened from levels of close to 105 just a few days ago. So good news for the Japanese exporters, though it is still stronger than levels what we saw earlier in this part of this year. But right now, the interim weakness in the dollar yen doing well for their exporters. Another thing that's playing out is a lot of these Asian markets, they're shut. So we have the likes of Hong Kong, China and Taiwan shut on account of the Qingming holiday, which is remembering ancestors. But the Korean market, that one is up. The Straits Index also up by about 1.5%. What does this mean for our markets? Well, the SGX Nifty at the outset indicates a start closer to that 10,300 mark as against the cut of almost 120 points that we saw in yesterday's trading session. So going on the front foot, hitting a 6 is what the SGX Nifty indicates. Let's see what happens, because today is the Bank Nifty weekly options expiry. Along with that, we have the RBI policy meet. So at the open, it's a green. Let's see what happens.
Oh, well, yes, a lot of cues lined up for the Indian markets, but the most important cue to begin with is the action that happened on the Wall Street yesterday. Now, after a wild session, the US markets closed sharply higher, erasing massive losses in the early trade that came after China's announcement of new tariffs on US goods sparked fears of a trade war. The Dow closed 230 points higher, rallying more than 700 points from its session's low. The S&P 500 erased close to 1.6% decline to finish the session 1.2% higher, while the Nasdaq also closed 1.5% higher. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
Let's recap this session because it was a wild one here. Stocks closed sharply higher as Wall Street erased those massive losses earlier that came after China's announcement of those new tariffs on U.S. goods. So you saw the Dow close 231 points higher. Now that meant it rallied more than 700 points from its session low. Microsoft, IBM, the best performing stocks in the index. The S&P, meanwhile, erased a 1.6% decline to finish the session 1.2% higher, led by gains there in consumer stocks. The broad gauge, we should mention, also closing back above its 200-day moving average, a key technical level. The Nasdaq closed 1.5% higher after plunging as much as 1.9%. Stocks mounted their comeback as the White House tried to push back on this idea of a trade war breaking out. Larry Kudlow, Trump's chief economic advisor, telling reporters that he wants to solve this with the least amount of pain. Kudlow saying above Trump, this is a growth action. I can't emphasize that enough. Apple helped lead the comeback in the market, rising 1.9%. Chip stocks also rebounding. Micron, Advanced Micro Devices climbing 3.6% and 2.3% respectively. Automakers, Ford, GM, they rose 1.6% and 3% respectively after falling sharply earlier on Wednesday. Boeing, though, now there's a company that can be adversely impacted by a trade war, of course. That closed 1% lower. Deere also pulled back about 3% in the session. Perceived safe haven assets got a bit higher, but failed to really hold those gains. Gold futures were up slightly in afternoon trading. The 10-year U.S. Treasury yield rose to 2.78% after slipping earlier.
All right. So meanwhile, U.S. Commerce Secretary Wilbur Ross, he says he isn't surprised by China's retaliation to U.S. tariffs. In fact, speaking with CNBC's Ross, said that it would have been extremely embarrassing for Beijing if it hadn't retaliated, adding that markets shouldn't be too alarmed. His reasoning is that the tariffs imposed by both the countries amount to fractions of 1% of the respective economies.
This $50 billion that they're talking about amounts to about 0.3% of our GDP. So it's hardly a life-threatening activity. Their response to the 232 tariffs was quite proportionate to the 232 amount. The response here is also quite proportionate to the $50 billion that we announced last night. So I'm frankly a little surprised that Wall Street was so surprised by it. This has been telegraphed for days and weeks. The WTO rules do not permit subsidies. They do not permit dumping. They do not permit those things. The rules don't really address very well intellectual property, but it's pretty fundamental that you cannot steal someone's intellectual property. That's what they've been doing. They have to stop doing it. If they got off those two bad behaviors, we're very happy to compete against them, and we're happy to see in which products we're the best and which products they're the best, have a real level playing field.
Okay, so that remains the key talking point as of the global markets are concerned. But to discuss that more, we are now joined by Seth Freeman, the CEO and Chief Investment Officer at EM Capital Management. Seth, good morning. Thank you so much for joining us. We just heard those comments coming in from Wilbur Ross that the street shouldn't have been alarmed by the trade tariff that have been put by China. What is your sense? Do you see this trade war getting stretched a bit more, or do you believe that the talk of negotiations that we have heard recently is what would eventually play out?
Well, I think it's early days, frankly. Whether the tenor of the trade announcements keeps changing, during the day. In the morning, China is a terrible place. And by the end of the day, after there's been a lot of pushback, these are just opening offers, you could say, for negotiation.
Right. So in that case, do you think these trade war fears are more bark than bite, and maybe every dip on account of these fears should be bought into? Is that the template that you would advise?
Well, thanks for that question. 1 week, less than a week into this. We're looking at futures, for tomorrow are actually up slightly. So I guess the market's not too worried. The problem is that we have people working on this who are not exactly, don't have a lot of experience in trade tariffs and so forth. And I find the most ironic thing is that the real result of these tariffs, other than the issues about intellectual property, will have the effect of raising prices and affecting exactly the people who support Donald Trump. So I'm not exactly sure what the end game of this is.
Okay, Seth, but then in that scenario, what do you advise the investors? Would you advise them to stay away from the US and the Chinese markets and focus more on the emerging markets there? What's your call on India then?
Well, this could affect all markets, really. Look at steel. Even though India exports less than 2% or roughly 2% of the U.S. steel imports, this did cause some consternation in the Indian markets. India is not a giant exporter to the U.S. other than pharma and intellectual talent. So I don't see that as being a big problem, although going back to my intellectual talent problem, I think in terms of India and certainly Indian IT companies, changes and tightening of immigration policies and the availability of working visas is probably more important to India than the trade war, frankly.
All right, sir. Thanks a lot for joining in and giving us your perspective on what the world is right now in this situation of trade wars, suggesting that maybe India will see a sentiment negative with regards to steel, but the bigger problem is what India directly exports to the US, which is pharmaceuticals as well as the IT space. But let's take a flight across the European markets, then across the Atlantic. European markets closed mostly lower amid elevated concerns for a tit-for-tat trade war between US and China. However, we saw sharp recoveries from the low point of the day across the European indices. The FTSE was up close to 0.9% from the lows. The CAC as well as the DAX, the French and the German indices recovered about 1.2% from the low point of the day and ended with just mild cuts. Technology stocks, they were among the worst performers in yesterday's trading session. The Italian index, in fact, showed the most amount of recovery, close to about 1.6% recovery from the low point of the day. In the emerging market space, though, it was divergent, 0.3% sort of cuts seen on the Russian index, while the Brazilian index ended with a gain of close to about 0.3%. Actually, beg your pardon, it was the Russian index which ended with a gain. The Brazilian index ended with a cut.
Okay, so that was about equities. Let's see what's happening in the world of currency then. The dollar index pulls back slightly from lows held by rebound in the US equities. Meanwhile, the dollar held steady against the yen. Focus now actually shifts to the Friday's jobs report that the street is watching out for.
In the world of commodities, crude oil prices bear losses after a larger than expected drop in crude stockpiles. Data released by Energy Information Administration shows the U.S. crude inventories fell by 4.6 million barrels.
And from the precious metal space, gold prices ease from a one-week high but still trade in the positive territory as dollar dips on trade war jitters.
Right then, let's move on to some developing story. In fact, it has been in focus for the last 2 weeks, which is the Facebook data leak incident. Facebook CEO Mark Zuckerberg has now taken personal responsibility for letting third parties access Facebook user data without permission. Speaking to reporters on a conference call, he says that his lack of action was a huge mistake.
You know, a lot of times people ask, you know, what are the mistakes that you made early on starting the company, or what would you try to do differently? You know, I think the reality of a lot of this is that when you're building something like Facebook that is unprecedented in the world, there are going to be things that you mess up. You never fully solve security. It's an arms race. And you know, I think in retrospect, we were behind, and we didn't invest enough in it up front. You know, we had thousands of people working on security, but nowhere near the 20,000 that we're going to have by the end of this year. So I'm confident that we're making progress against these adversaries, but they're very sophisticated.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, back home, China's retaliation to Trump's trade tariffs weighed in on the market. The Nifty ended with cuts of more than 1%. The Sensex too despite managing to hold on to that 33,000 mark, did end with a cut of 350 points. The mid-caps fell in line with the benchmarks, but that was as far as yesterday is concerned. That after we saw a sharp rally on the Dow, the SGX Nifty indicating a sharp gap up. Ekta, a lot of cues today, right?
Yes, absolutely. Well, I'll just start with recapping what took place in yesterday's trading session. Like you mentioned, the markets reversed gains on those trade war fears which really emerged because China announced new tariffs of around 106 US products. The Dow future, by the time we had closed in yesterday's trading session, was down 450 odd points. The Nifty slipped below the 200-day moving average of around 10,186, and eventually it was a cut of around 1% for the Nifty and the Sensex, with the Bank Nifty underperforming with a cut of around 1.5%. Week to date, if you look at the markets, we're up only 0.15%, and the mid-cap index, which has outperformed, is up only around 1.5% as compared to a 3% gain that we had started yesterday's trade with. Now, if you're talking about flows, they were quite positive from the FII stable as at least. So it was a net buy figure of around 350 odd crores, and the DII sold around 153 odd crores in yesterday's trade. If you're talking about today's trade, then yes, definitely we could see that kind of momentum because that's what the SGX is indicating. The US markets reversed after that initial drop that we saw for the US markets. So it was a positive close for the Dow, which was up around 1%. We have most of the Asian markets which are closed in today's trade, but if you just glance through it in terms of the markets which are open, they too are quite positive. So that is going to percolate and trickle down to our markets as well. And like you can see, the SGX is indicating a positive start. Now, a lot of cues to work with today, like you mentioned. So we have the RBI policy. We expect a status quo in the policy today, but the commentary would be crucial in terms of what the future trajectory would look like for the policy. Besides that, we have the Bank Nifty options expiry to deal with as well. Overall, if you're talking about a Nifty range, we're probably in a range of around 99.50 to 10,420. So let's see whether we manage to go closer towards 10,420, which is also close to the 100-day moving average of around 10,430 odd. Remember that the 200-day moving average now stands at 10,189. So the street will be probably looking out for a sustaining above that level, which seems to be a simpler task for today. Again, it's a stock-specific market. Lot of stocks at fresh 52-week highs. Apollo Tyres, Bharat Financial, Interglobe, MRF, Nestle, Pidilite, just to name a few.
Okay, so you mentioned it is a stock-specific market. In that scenario, what are the stocks in the counters we should keep an eye out on today, Ekta?
Well, in terms of a couple of pieces of news, we have some source-based information which came out last evening where there is no decision taken on accepting or rejecting Banani Industries settlement offer by lenders. So that is in focus. ICICI Bank clarified that they have not got any communication from the SFIO in the Videocon loan case. A government official to CNBC TV18 has indicated that they're likely to adopt the ordinance route on the proposed IBC amendments which had come out just a day before. Natco Pharma has launched a particular multiple sclerosis drug in India, so it's a positive sentiment positive. BHEL has commissioned a plant in JNK, so that stock should be in focus. Max Financial is going to have a board meet on the 9th of April to consider raising funds via way of debt for investment in its Max Life Insurance arm to fund acquisition opportunities. So that stock would be in focus. Kansai Nerolac has made an acquisition worth around 36 odd crores. A couple of other stocks include something like a UCO Bank, which is clarified on a 19 crore fraud case. Indico Remedies has got the go-ahead from a Japanese regulator for its API plant. Force Motors monthly production data out. Dilip Buildcon as well is going to receive around 17.73 crores on the completion of a project. And we have stocks such as IEX, which we've been discussing through yesterday, as well as something like an Indian Hotels, which is probably going to be in the green today.